Good morning, everyone. Welcome to the Euro Trade. I'm your host, Mark Stoker D. If we're meeting for the first time, I have been trading for 18 years. And 13 years out of that, I've been working for various prop firms as a commodities trader. So that's what we're going to be looking at here. So we're going to be looking at precious metals and energies markets. Maybe even a little bit of DAX, even though we still can't trade it on Topstep, but it will come at some point, because that's what I like to trade this early in the morning. Bruno, our lovely moderator, has already posted a risk disclosure in the chat, so anything you see here today is for educational purposes only. Alright, now that that's all out of the way, let's have a look at what we have charts wise. I'm going to focus on copper first, then we can have a look at gold as well. Right, so Friday copper, a little bit quiet, one little move during the COMEX initial balance, and then it kind of settled into value, and that is where the value is located. I do have some confluences down there, but at the moment we're so far away from that. However, in the most ideal world, I would like to see the Asia low tested at some point today. So that is around 96.70, and I will be looking for longs there. Whether any shorter term scalps range trades come in before then remains to be seen. Just remember that with the London session, it typically likes to reverse whatever Asia has done. And then I'm just gonna close the door because my 7 is going a bit nuts. And I managed to knock over my side light. So, great start to the Monday. Alright, where were we? At the moment, London has failed the auction on copper. So I'm just going to make this a little bit bigger. Why am I saying that? Because the initial balance high and low are located here. And if we get to Asia high and then do a sort of a smash and grab sort of situation, stop, run and reverse, there could be a little scalp down to the middle of this entire profile, which might move upwards as we get deeper into the London session. So that is something to consider. And yeah, so let's write some hypos here as a plan for today. So, in the most ideal world, we want to be long with a larger time frame picture. And just to remind you what's going on the weekly chart, we do have this whole range, and it keeps trying to pop higher and higher and higher. However, at the moment, they're just pretty range bound. One of the areas of interest is 505 today, which is a call wall, so we're going to move that to 505. Actually, let's do coordinates, because it is easier. And then any puts. GEX2 is at 5 evens. That's always an area that that I like to look at. Why? Because it's a stabilizer on most days, especially in positive gamma, which is what I think we have today. No, it's actually negative gamma. Okay, interesting. All right, so in that case, I do have another level sub 5 evens, which is 495, sort of closer to this whole ADR low and the COMEX value low. But I do want to be long as a sort of reaccumulation and then an eventual move through that massive candle that we had. So number one, so Asia low, and then a put wall. Now, how those longs are going to look. So here, how those longs are going to look as the day develops, obviously I don't know. So I don't know whether it's going to be more of a range trade, or whether maybe it's going to be an auction fade, or maybe even a failed auction if we go into a nice pullback. But where this is at the moment, until we smash through Asia high, I actually don't really want to get involved until we do that. What's happened with the text here? Let's do that again. And to make this a bit clearer, I'm just going to mark these two together. So what do we have on the profile? I have the fixed range profile here. It's currently trying to move away higher, and it's built value right above VWAP. But again, because we're so close to this high, I don't like doing breakouts. So even if it breaks out, I would want to see it pull back somewhere. So one choice for a breakout trade would be if we hold a 15 or a 30-minute time frame above Asia high, then we come down to retest 505, which is a former call wall at that point, and then maybe some more longs. So that will be trading towards this ADR high, and then expecting maybe a slightly unusual day, or to keep it statistically relevant, to just limit our profit into the ADR high and call it a day. So it would be a smaller trade profit margin wise, unless we get some sort of a release or somebody says something about tariffs, and then this would be a little bit less of an intrinsic profit margin in that particular setup, but it is there. However, I will put it probably as third hypo. If Asia high does not bring any sort of a sustained move above it, that opens up the possibility for a short. So short, which would at that point be a neutral day fade. And normally I'm not too keen on doing the flipping and flopping around the same level, especially if you are more of a beginner, because then you just kind of end up not knowing exactly what you're looking for, and you just keep digging your P&L into the oblivion by doing multiple trades. So if I am doing a flip and flop sort of from the same level, long or short, line in the sands type situation, I usually try it once on one side. If that doesn't work out, I will then give it quite a bit of time. So it's very unlikely that if the first trade fails, the second one is already going to set up for me. And the reason being is that my stops are always placed at very obvious invalidation point, so it really needs to break a level and sustain away from it in order for me to go, yeah, okay, that's no longer valid. So it's not about not being wrong, it's about being wrong and then knowing how to handle yourself right after. But if you're just wrong and then you're like, oh, you bastard, and then you start flipping and flopping, that's when you get yourself into trouble. So whenever you have a line in the sand level, you have to be quite disciplined to make that work. And then the final one, do I have a short somewhere? Let's see. All right, so I suppose a short would be, let's say I'm not able to catch the reversal from Asia high. So I'm just kind of hypothesizing what could happen here. And then we still reverse, but let's say the candle that fails is too big. There would be an opportunity maybe for some sort of a mean reversion into GEX2 and into the Asia low, quite possibly with the help of the COMEX initial balance. So that could be a setup. I don't know what COMEX open is going to look like because it's so far away. Mean reversion. It's very mean. The reversion is very mean to all of us. Alright, so let's see. Joe trades in Spain. Got screwed out of passing my combines last night. Tried entering long on gold when the market opened. Of course, Topstep technical issue didn't let me. See, Dakota made 17K on the same trade. I mean, you know, technical issues will happen. So just by the fact that one trade blew all of your combines, again, I would argue that that shouldn't happen. And I know that you're like annoyed that there was technical issues and whatever, but just use this as a learning experience. Just because Dakota made a certain amount of cash on the same trade, he is in a live account, which is a different server. But quite possibly, you know, another reason why eventually you may want to go live. Because obviously there's so many people on the XFAs and the combines. That's all on the same server. Live accounts are on a different server. And even if one side of it is having issues, generally live accounts don't suffer as many issues, if that makes sense. But use it as a learning curve, right? What happened? Well, one trade and it blew up your account. Were you oversized? I would say yes. One trade, no matter what happens to it, it shouldn't blow up your entire account. That means your risk of ruin is super high, okay? And that is not something that is sustainable, let's call it that way. So instead of pining and playing, you know, sort of victim and going, boo-hoo, Topstep bag sucks and whatever, just go, okay, well, maybe I should size down. And then next time, if there is a technical issue, I won't blow up all of my accounts. Just a thought, okay? And I know that's not what you want to hear, probably, but I have to play some tough love here. I've had some issues with AMP data as well, and AMP just generally not. I mean, who are you going to complain to? AMP? Like, they really couldn't care less, right? And you go, oh, your platform malfunction with data. They won't even deem that as a response, because in the fine print, when you sign all of those documents, when you join, you know, them, they say that they won't be responsible for any data feed issues, because sometimes the data feed issues are actually nothing to do with the companies. They're to do with CME. You know, sometimes they basically don't, they malfunction. It's all cloud-based, right? And there's servers that fail. There's always going to be something, right? Sometimes even their platforms lock up at times of like super high risk releases. so you can get locked into a trade, right? And Bruno is telling me the issue that occurred was about 19 minutes, and Dakota started to trade hours after it happened, right? So that's, again, additional information. If one issue that lasted for only 19 minutes blows up your account, I would really turn around and look at that, how my positioning is. It even, reinforces the issue. So, and so it wasn't the same trade, right? It wasn't the same trade. If Dakota started it hours after, it's not going to be the same trade. So, yeah. Amanda has a point as well. She says, I'll just put it out there on gold. The first hour after the open, it tends to be a legitimate death trap where algos deal. I have to stay hands off until 7 p.m. New York time. So let's talk about it. The real moves in gold, actually, let's have a look at gold. The real moves in gold, as well as copper, they actually start for Shanghai Exchange Open. Anything before then is, like she says, a death trap, but it's not really a death trap, it's a random walk. And then once the Shanghai Exchange begins trading, you will see more of the commitment and movement that brings sustained moves that have more weight to them. So I'm just going to get rid of some stuff here. Then we're going to have a look at Globex Open. Okay, so Globex started here, right? And then I can see that there was, again, a consolidation with a bit of a pullback, but not meaningful enough. And then nothing happens. So this is Tokyo Open. Look how flat that is. Tokyo opens, nothing, 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 nothing. And then as we get close to Shanghai Exchange opening, and finally this is 10 minutes before Shanghai opens, we have this huge volume that comes in. That's Shanghai Exchange, right? So only, like whenever I was awake through Asia, usually when I was touring, when I was still a musician, I would have waited until the Shanghai Exchange actually starts trading and then try and find my setups. So consider that time of day might be something to look at. I have a concept called time of day as a level for a very good reason, because there are certain things that happen throughout the day that bring the structure into the markets. And for those of you who don't really understand what's going on, maybe you didn't explore it enough, right? But Shanghai Exchange is a very important one for GC and HG, so copper and gold, because apart from LME, London Metal Exchange, those two are very important in pricing the gold and the copper worldwide. Okay, very important. There are some people who can even there's some people who would even look at the divergence between sort of London Open and Shanghai Exchange, but I don't like that, because for me this time of day is not the high probability time of day when, you know, every single day you have really nice moves. You can see that in gold now as well. It's consolidating. It's gone all flat. Why? Because they're waiting for LME to open. So this is one of the reasons why this is, to me, I would say that there's more opportunities at the end of Tokyo, which is 6 a.m. my time. So end of Tokyo, somewhere around here. And then they just kind of consolidate because the market ended and they're waiting for the next guys to come in. But then London session steps in, LSE, and nothing happens. Like on most days, it just goes sideways. Right, Bruno is also saying that no one could take a trade during the problem for 19 minutes. Yeah, I don't know whether we should blame that. Okay. Joe says, well, I meant today I will blow these accounts. Well, then that's a certainty, right? If you come to the day and you go, instead of, okay, this is an opportunity to get myself out of a drawdown. No, you're coming into the day saying, well, today I will definitely blow these accounts. Like, who's that going to help? Wouldn't it be better if you go, actually, you know what? I'm going to try and bail out these accounts rather than have a monetary consequence of having to buy resets or more combines or whatever you're going to do with it. Why not just try and get yourself out? So yeah. Vikas is asking, should I use Wi-Fi or wired internet? Wired every time, because Wi-Fi is great for browsing and stuff, but if you want to trade, just don't trade on Wi-Fi, man. That's not good. Yeah, so if you are frustrated, Joe, one thing to do is to not trade today. What's going to happen? You miss a day. It's Monday. Like, if your strategy is working consistently over many days and many weeks, why do you need to trade today? Markets will be here. When you're clearly under emotional distress and you're probably not going to make good trading decisions. So why not just have a break for today? Damage is done. You can't change it anymore. So pining over spilled milk is not really going to help anybody. So why don't you build some of those emotional resilience chops? Go have a nap today. Go do something else. Spend time with your family. Spend time with your dog. Something that, if you have a dog, but do something that makes you happy and step away from the markets. There's life outside of trading, okay? Just because you miss out on one day, it doesn't mean the world will end. Quite the opposite. The world will keep going. Markets don't care. And, I always say markets don't care about your emotions, but it doesn't mean that you shouldn't. And if you're feeling emotionally dysregulated, the last thing you want to do is to sit and to keep trading. And if you can walk away, that will actually show maturity as a trader. There is maturity. I look at people who just start to trade, no matter what their age is. They could be like 70 years old. But if they've just started, they are kind of like kids, because they've never had to deal with the instantaneous consequences of an error or a mistake that has caused them emotional distress. Usually in life, there is a time that goes by in between the error and mistake and the consequence. There is no such thing in trading. They are like instantaneous. And that throws a lot of people off. So a part of you becoming a good trader has nothing to do with levels. It has nothing to do with charts. It has to do with you not losing your shit when something off happens, whether it's a technical glitch or whether it's the market stopping you out in like a nanosecond as soon as you entered, and then you have a moment, we're in, we're out, what happened? If you have and then you get annoyed. It's like, so I would say that trading is not even a mastery of reading charts. Like, of course it's a part of it, but I would say that trading is a mastery of oneself, how you behave in a drawdown, how you behave when things are not going to plan, how you, like, are you going to be like a 3-year-old that throws the toys out of a pram every time something happens? I would hope not. I would hope that all of these, programming shows and everything that we do, that we're trying to change things for people. And that's a part of it. Something irks you, well, don't trade. Go do something else. Come back tomorrow, size down, go to micros and go, all right, well, there's a consequence now. Mo says, D, how do you train yourself from seeking those instant highs from quick trades which are mostly oversized? Well, first of all, stop doing oversized trades. That's number one. Second of all, you may want to consider something that's a little bit controversial, because it's not like a study, it's more anecdotal evidence. And I would say dopamine detox. So whenever you are doing something that throws off your dopamine baseline, whether that's oversized trades that you win on, it gives you a squirt of dopamine and pleasure into your brain. Then it's like something like having a drink. It brings you pleasure because it relaxes you, and it's like, oh, you're a little bit floaty. anything that throws off your baseline is going to affect how you behave. So there's dopamine highs and dopamine crashes. And a lot of the times what we see as a consequence of somebody, let's say you get to an XFA after grinding it out for 3 years, right? You finally have your XFA. That brings you goal completion, even though it's just the beginning. So it's not even the end. It's just like literally just one small step to infinity. And then people get this, they experience like heightened motivation and productivity. So if you've ever gotten that feeling of, oh, I want to trade my account, I want to trade my account, oh my God, there's a new XFA, I've got to trade it right now. That's not your prefrontal cortex talking. That is the dopamine fix talking. Increased productivity and motivation, two possibly the worst things that a trader can experience. So I usually say to my students, once they pass the combine and they've never done it before, it's the first time, to actually have a 30-day period where they don't touch that account at all. You activate it and then you just let it hang there, whilst you go and do a dopamine detox. What is that? You need to stay away from all things that you find extremely pleasurable. And I think all things. Something like, if you enjoy really nice foods, just eat some bland, simple foods for 30 days. There's a faster way to do it, but, again, it's anecdotal because the study was done on mice, not on humans, that in 2 days of fasting, complete fasting, you can reset your dopamine levels. But if you're not doing that, it usually takes about 30 days. And that's with staying away from things that will throw off your dopamine baseline, and then just focusing on meditation, relaxation, basically just trying to be as level as possible. So not going out to, really nice restaurant where somebody's going to serve you whole bunch of nice foods in tiny little plates, drinking excessively, drug abuse as well, recreational or otherwise. That's the worst thing you can do, because it will definitely mess with your dopamine receptors, especially certain drugs that have a big influence on that, but also alcohol, a legal drug, right? That also has a lot of effect on your dopamine, bizarrely. So it's initially a high, but then it's a nervous system depressant. So you get pleasure from drinking, but then you have a crash the very next day. So that's not a good thing for traders. And these days there's no pits, there's no open out. Well, there's maybe a couple left in the world, but generally you have to be there by yourself, nobody else, just you and your screens, and you have to try and do the best that you can to control yourself. It's not easy. Definitely not easy, but there are ways around it. So yeah. Psychotherapy says that smart, taking 30-day detox. I've passed plenty of combines and shot plenty of XFA running into things so fast. Yeah, that's why. Increased productivity, motivation, you get the urge to trade, you want to trade. The first trade doesn't go well, then you oversize because you really, really want it. Really want it. And then what happens? Nothing. You lose the XFA, and then the high is quickly evaporated, and then you feel depressed, right? So as a trader, you have to be really stable emotionally. Like, I was always a very, very stable person. So, whenever I have maybe somebody who's quite new, even though I wouldn't, I don't really take on ultra young people for a very good reason in the coaching, because I feel that they just don't have the emotional maturity just yet. Few do. I actually know a couple of people who are very unusual, sort of 20-something-year-olds, and they are probably the odd ones out. They're very level-headed, they're super intelligent, they don't really go out much, or even if they go out much, they find it dull. They're like, yeah, whatever, party, who cares? But yeah, there's ways to detox from dopamine. So if somebody is super young, I would doubt that 90% of them have the maturity and the level-headedness. But then again, I run into older people who are level-headed in every other aspect apart from trading. That irks them. That throws them off. Why? Because it's almost like finding a new skill. And if you already have some life experience behind you, you can then use that to call upon that skill when you need it and try to transfer it to trading, so it takes a lot less time. But you know, these days, let me be Granny D for a second here. You have young people, everybody claims they're depressed. Everybody claims they have anxiety, depression. It's like, first of all, have you checked your bloods? Is there maybe a reason why you're constantly feeling anxious? Because that's not normal. And then somebody's going to say, well, I will never own a house. Oh, I will, you know, the world is different. Yeah, join the club, mate. Like, I was born in 1980, right? And in the country where I grew up, we had wars throughout my teenage years. Like from 1990 to 1999, we literally went through 3 different wars. So what was I supposed to do? Be super anxious all the time, not knowing whether you're going to be alive or not tomorrow or today. You know, if there's an air raid or something, you didn't know. And then you live in the moment. And, you know, if there was one huge positive takeaway from all of that nonsense that we went through, is the fact that nothing is guaranteed and you can't dwell on what was. You have to live in the moment. If you know dogs are exquisite masters at living in the moment. And, you know, I do suffer from a chronic illness as well, and I've literally applied that mindset onto whenever I feel terrible in the day. And, you know, you just can't change it, so you need to just kind of roll with it until it's over. It's just how it is. And with trading, getting depressed, getting anxious, constantly being depressed and anxious, if you're going to be a trader like that, it's going to be a very miserable experience. Very miserable experience. So you need to find a way to either make yourself stronger or find another job. Like, I'm sorry, I'm going to be like super straightforward here. All right, let's have a look at gold levels for a second. So Granny D over here signing off for a second. Well, so okay, so gold has come up quite a bit. I don't like doing breakouts when we've come up this much during Asia. If we rotate all the way down to 40.22 area, that could be something to look at. And then as soon as we get down there, we actually have, or it has, a bunch of GEX levels and call walls and a whole bunch of stuff, literally all in 5-point increments, all the way from 40.30 all the way down to 4,000. So if we run into that, anything sub 40.30, if we kind of go deeper into that area, it's going to be, so the best choice there will be to kind of run into 40.30, 40.20, then to reverse and then carry on higher. But where it is right now, I would not go long. Maybe if we tag 40.50, which is GEX1, but let me also have a look at how the price action. And what is this? I don't know. So 10th of November. I'm just looking for Friday COMEX. Is that it? Yeah, but this needs to be like that. Right, so volume value, which might be easier. I mean, it's very similar. It's not like they're drastically different. But the COMEX volume value, you can see it on the visible range profile. Sorry, fixed range profile. All the way down there. Couple of points of interest, just purely looking at the price action. We have this former high here, so a little bit of a demand in and around this area. So 40.50 is where this little demand area is. That's GEX1. Now this whole development is in positive gamma for now. So maybe GEX1 might act as a stabilizer, that one area. And then sub that, nothing until 40.30. And then we have 40.30, 40.25, 40.20, like literally about 7 or 8 of them all the way down dotted to the round number of 4,000. So the area from 40.30 is going to be very tricky to have smooth price action there. So if we fall into that, again, one of the setups would be COMEX value high reversal, somewhere from 40.15 or 40.20. That's where GEX2 is located. So maybe longs from value high. Do I want to be doing shorts when we've come up this far? Probably not, because the way I'm seeing this is a reaccumulation from the daily consolidation. And we now have room at the very least to get up to 42.70, which is where the former supply is. So would not want to be short gold unless it's like late in the day and unless it's quite obviously like some sort of an auction fade into settlement. So I wouldn't even touch gold until if we're talking shorts. But if we get a decent pullback, I will purposely avoid that, and then I would try to find some longs and be patient with catching the falling knife, because you don't want to just plow in. You need to have that stability, you need to have some sort of sideways movement, you need to have some sort of sign that they've stopped. And then usually those sorts of reversions, I wouldn't, like, are they reversions to the mean? Not sure, because I think that we are in one right now. This was a mean reversion, and now we're going back up. So I would maybe say that half of this swing could be a good price point to stop with the longs. So that's 41.50, just the middle point. But usually we expect the market to rise up all the way back where it came from in an uptrend, and then that supply eventually should be broken, but you know, we're talking quite possibly weeks from now. SC says, hi, do you recommend Mentor Q? Yes, obviously, I use them every day. Mentor Q levels is where I look at my options levels, so I no longer stare at the options matrix myself. Sometimes I do if we have like an outlier day and one of my products doesn't have an intraday option on Mentor Q, even though they have a lot of them. And yeah. Let's see. Yeah, most clinicians would say 7 to 14 days is optimal. For most other things, yes, but not for trading. It's not enough. And you know, over the last 8 years, I've mentored like 400 people myself, and we have 10,000 students as well. So I can tell you that for trading, maybe with fasting, 2 to 7 days will be fine to return to baseline, but unfortunately, trading is a little bit different than anything else. Well, let's have a look at what DAX is doing, because that's my baby for this morning. Right, so DAX has made a little bit of a single print to the upside. So we had Asia high, then London open, smashed that, a little bit of a scalp down. Now we have a single print. So I do want to see the single prints closed out. This was the end of day scalp that I did the other day. Let's have a look. So, where's this coming from? Just gonna have a look at the weekly. Right, so we're coming from a daily demand area here. Range, kind of similar thing that copper is doing. So, reaccumulation potential, coming away from a daily Q low, which is a swing low extreme that had some sort of a squiggle in it. As in like a real wobble, real swing. It's not just a consolidation and then nothing. So it actually fell down, then went back up. So these single prints, I'm not going to be taking along here, but I do want to see them at least tag VWAP at some point. So I would expect somewhere towards my 11 o'clock, which is in about 45 minutes, to see that reversal that DAX loves to do in the pre-market between LSE and NYSE. And then maybe we'll have something. But at the moment, again, we need to be patient. Ideally, I would like to see it tag 83,842. I know it's quite a specific area. So VWAP is the first one. Second one is the average session range low area. And that's where GEX2 is located. So VWAP might be a little bit too high in this situation. But then maybe a retest of that whole demand on the daily, and then maybe we'll have some longs. But I'm not going to be short here because it's a bit tricky. Because who are you talking to, mate? And you also say, I blown 13 active phase without any payout. Well, you need to switch some stuff around. How should I proceed? Separate trading or copy trading? Because have you ever received a payout? Like ever? Desmond said, GC, range trade, London IB for opportunities. That's too labor intensive for me. First of all, the range is so tight on gold, Mariano. I like to have a good range before I get involved. And working with 100 ticks both sides, very labor intensive. Now, do remember that, you know, us who are a part of Topstep crew, we have very long days, right? So a lot of the days I will do these shows and then I have to do either like live sessions or we have a main broadcast to do. And to me, that's like 12 hours apart sometimes. So if I spend all of my mental capital doing nonsense low probability range trades, scalping tiny little bits, which is not really in my energy envelope, anyway, I'm not going to have enough mental capital to actually jump on the high probability opportunities that bring me a lot more cash for a lot less risk because it's one trade for 300-400 ticks on gold. But, you know, at this age, I'm just not able to maintain 8 to 12 hours of mental capital and still make good trading decisions. So, you know. So, Vikas, I'm waiting. Have you ever taken a payout? Still waiting. In the meantime, let's talk platinum. So platinum, seasonally speaking, maximal. So seasonally speaking, as we get towards the Christmas period, there should be an increase in demand for platinum. Why? Because jewelry, right? Christmas, gifts, all of that. So I wouldn't be necessarily looking at platinum shorts unless we're again very late in the day. But let's have a look at it. Weekly time frame. A little bit spiky. Don't like these massive wicks. This is tough price action. Inside bars, obviously an uptrend, bit of a pullback, but this kind of looks like gold is has been doing a number on platinum, because it wants to pull back, but then gold correlation drags it back up, and it's just like wait. Same thing on the daily chart. We are seeing a bit of a demand increase now, but really in order for this to continue higher into the Christmas period, I would want to see it above 1634 without any selling wicks. This was a drop-based drop. We already had a reaction from the base. All up at the base. And then I will be looking for platinum to continue higher, because there's no real reason why it should go down, especially not into... Okay, no payouts. And by the way, I'm not Topstep official. I'm Marcus Stalker D. Okay, let's get that right. No payout. So no copy trading then, because if you trade multiple sessions, which again I would probably advise against, I would focus on maybe 2 accounts, and only if you trade multiple sessions. So if you trade Asia, maybe you trade London as well, designate each account for each session. No copy trading. Why? Because your competence is not yet proven in payouts, right? Therefore, it means any sort of idea of scaling through multiple accounts, trading with dollars in your eyes, has to be put on the back burner until you figure out why you can't get even a single payout. Second thing, stick away from 150Ks. Start with 50K. 150K is for those of us who have proven skills and we can bank over a very short period of time, and we have proven ourselves in payouts, okay? Because 9K is an aggressive target. If you look at something called the drawdown to target ratio, like how much drawdown do you get for the very aggressive target, let's do a little calculation. So I call it the DTR, drawdown to target ratio. So the target on a 50K is 3,000, and you get $2,000 of drawdown. That gives you a DTR of 1.5. So you only need to make a little bit more than average. And usually whenever I'm looking at a challenge for somebody who has never taken a payout and is struggling, I want this DTR to be no bigger than 1.8. Ideally 1.5, maybe 1.3 if you can find that kind of a challenge. But, 1.5 DTR, generally pretty achievable, okay? And remember, if your goal is to start getting payouts, any payout in the first month or two is an achievement. But I'm not talking, having that extremist outlook of, I'm going to get a payout, it's going to be 50 grand. Start with 500, okay? You can't go from 0 to hero. You have to start slow. Now, if you look at the 150Ks DTR, you have to make 9 grand for 4,500 of drawdown. That gives you a DTR of 2. Challenges that are 2 DTR or over, because some companies have it over, they are very hard. Why? Because first of all, to get a payout, to be safe, obviously Topstep has some different rules, but I still go by payroll management, like bankroll management, to not even get any sort of payouts until I have, at the very least, like minimum drawdown out of the way. But even in Topstep, even though you can take a payout, like let's say you generate $1,000 in 2 weeks, and then you have those $150 for 5 days, and then you take a payout. But what's going to happen? So now you have $500 left. Why? Because your maximum drawdown goes straight to zero after payout. So I do not advise anyone to take any payouts until they clear the trailing end of day drawdown. And then you don't take 50%. You would typically take anywhere from 10 to 30%, depends on how much cash you want to build in there. And then you get your first payout. But it has to be done just on one account first. Once you are able to take at least one monthly payout for 3 months, then you can start thinking about copy trading, multiple accounts, sizing up, scaling up, because your skills will tell you that you're ready. Right, so let's have a look at what platinum is doing. That was the value. All the metals have gone a little bit crazy. I'm just going to see which one sort of looks the weakest. Let's look at silver as well. Okay, so I mean, I don't know. None of them look particularly weak. Because where all of the metals are right now, to me, that's too high up. And I'm just looking whether there's one that's showing obvious weakness compared to others. And then maybe that one will be a long. What do you think about ES? I don't really, think about ES. It's popping up, right? Okay, I do have a combine here, so. Okay, but unfortunately I can't show you it. So what happens when you have a live account is that if you don't pay for a particular thing in your live, it's not going to be available. So I can't show you that. Because I'm not an equities trader. I trade DAX, but apart from that, I don't trade ES. I trade YM. We can have a look at YM, but I don't know how that will help. But yeah, when I looked at it on Friday, it was pretty bullish. All right, so ES is opened with another gap. So we have a visual gap now at 61.60. That is where, oh no, hold on, gap, I would say, yeah, 61.60. 67.60, sorry. Reading glasses, kind of doing their thing, but it's a little bit weird. All right, so what do we have in regards to ES levels? Because I can give you those. Well, we have GEX2 right here at 68.20, so maybe wait to see whether they smash through that. There could be a mean reversion opportunity, but again, shorting at this kind of an outlook, coming away from the demand area. It's an equity index. We had a very big bounce from post some comments from a whole bunch of Fed speakers, and yeah, nothing can keep this down. So to me, equities are a bit boring. Like even DAX, it's like, oh, what do you do with it? Well, around about this time of day, there is a chance for shorts, but the same is not true for ES and NQ. On a lot of the days, it's just like a snooze fest watching paint dry. But speaking of equities, DAX, it might be turning around. Let's see if I can maybe fade this through a single print feed, because we've built up a little bit of value here. Yeah, so ES generally long, but you know, it depends the time of day when you're getting involved with it. From GEX2, it can be a decent area to actually fade the move. Can I check NG and CL? My favorites. Of course I can. So, natural gas. We have a gap up. We had another gap up somewhere. Let me find it. Was that this week or previous week? Yep, so we had another gap. About a month ago, that's what I'm remembering. So how did we behave through it? The gap never got closed. What does that tell us? It tells us that the weather is probably getting a bit colder and the demand for natural gas is rising. However, again, this being so high up, we need some sort of structure. And right now, there is none because we're just mildly pushing. There's some equal highs here. They usually get taken out. Think of them as kind of poor highs. Poor highs. Poor highs. Are they okay? Should we start a fund? Poor highs. So yeah, think of poor highs as areas where the market will actually take those as liquidity and typically reverse it. Asia had a decent medium-sized move. I wouldn't ignore this, so I will put this as sort of like Asia high, Asia low situation. Doesn't happen that often on natural gas, but when it starts to happen, we need to look. So this is Asia high. And Asia low. Don't know what that was. Don't care. Right. Next up, we want some GEX levels and options, because options are pretty important for natural gas. We have a gamma wall at 450, so again, another reason not to go straight into this. Wow, okay. Damn, GEX 3 all the way down at 430. It's very far. Yeah, okay, so not sure what to make of this. We have positive gamma for now, but the gamma flip level is at 445. If we go lower than 445, then we may have a really nice reversion. So 445 there. So basically, if we go into this gap, I would expect the gap to be filled. Whether that happens today or not, I don't know, but we have literally GEX 3, not even GEX 2, but GEX 3 at 430. And then GEX 2 is all the way down at 420. I mean, you know, unless this is an outlier day, which I kind of doubt it will be, we may have a pretty decent chance of reaching those. But I'm going to have a look at how we're opening. So this is a Friday value. This is volume fixed profile. It's similar. There will be a few ticks difference on the TPO profile versus the thingy, but it's the simplest way that I can give you the levels. So yeah, mean reversion to value would not even close the gap, because the gap closes all the way down here. Now on natural gas, let's have a look at very low time frames just to see whether we have any obvious volume candles that we can use. Ooh, okay. So we have this one. Yep, that's the highest volume candle. And we are below that, okay. So what I've just done, I've just anchored a VWAP here just to get a bit of a feel for what they're trying to do here. We have VWAP at 448. I wouldn't go short into this, but shorts might be on my card on natural gas. On the card, just a single card. So for today, for right now, if we don't manage to bounce from this big bullish engulfing here, I may want to short this. Let me just check bookmap as well. Get all of the information. Right, so yeah, slightly negative delta. Slightly negative delta. Tried to go positive around 10 o'clock and then immediately reversed the bubbles. So sellers are in control at the moment. And now is the volume doing anything? Volume, a little bit patchy here. So we have one kind of bigger volume candle, then another one, but then very patchy. Would like to see that be a little more consistent. Like for example, if you see this big volume and then 2, 3, that's kind of a bit of a follow through, but then the price wasn't going along with it. So that's a divergence, but you have a bit of volume churn, but then the price is not pushing higher. So volume divergence, and then usually brings short-term reversals. But right here, right now, I want to see how we behave at 450. So I want us to retest natural gas 450. Which is a core wall, and then if we're not able to bring that higher, this could be a little scalp short for the morning. Crude oil, I haven't really looked at much. I looked at the daily chart, you know, because you know, I might want to do an options trade or something. But not here. I would want it to fall into more of this range, or I want it all the way up here. So between sort of 74, 72 is where I would be looking for some options trades. But I'm no longer trading crude oil intraday because the range is just so sucky that I absolutely despise it. I can tell you where the options are for the day. So crude oil gamma wall from end of day trading is at 60. We bounced from 60.50, which was a gamma flip HVL area. So technically we are in negative gamma territory, which means that any sort of GEX levels may not be respected as much as you want them to. Having said that, we have dotted levels kind of like in gold, actually, all the way from 59.50 down to 57.70. So it's not great for smooth movement. Anytime you see, let me just show you this. anytime you see this, Gex 2, Gex 3, Gex 1, Gex 4, it's like, that means they're going to be hedging. Even if they go through the level, they go back up, then they sort of hedge, then maybe they'll kind of hang there. It's like it's such a painful price action. And if anything irks me these days, it will be crude oil. But yeah, so for me, crude oil is a no. RBOB, on the other hand, much more interesting, yet highly correlated with crude oil. So if I put them side by side, on the weekly chart, you will notice that RBOB actually on the weekly chart has a trend, whereas crude oil does not. It's flat as a pancake, flatter than Kate Moss's chest. That is not what we want to see on large time frames for a good smooth intraday movement, because it means nobody's pulling anything. They're just like sitting there. But RBOB on the other hand, very nice supported uptrend with a volume. Crude oil, it's anyone's guess, right? So on the daily time frame, RBOB is also slightly pushing. Again, crude oil flat. So to me, RBOB is a better market. It's a derivative of crude oil, but it's nearly 3 times more movement. It is less liquid because look at this at this time of day. It gets a little bit more populated, but not terribly so. So usually you will see it with like 6, 7, maybe 14, and then every so often you get a big player, and they're so obvious. And you know, if somebody comes in with like 110 contracts, you're gonna be like, But on natural gas, I've noticed somebody keeps buying after hours. So be careful of that person. Whoever it is, it must be an institution or something. But I've noticed that after hours, something interesting is happening. Just revisiting natural gas. Hold on. Is that different if I put it on the right? It wasn't. Didn't realize that happens. Because the VWAP's not there. No, VWAP just disappeared. Did it not save it? Oh no, it did save it. I'm being a muppet. Muppet D. Yeah, so on natural gas, I want to show you something. Because those have been very sweet trades for me. And those are the trades that I kind of made my career on as well, but just want to show you. So, on Thursday, we had a GEX2 level at 420. This was a trade that I did on my live quite late in the day. 420. So, I was watching a 2-minute chart. Obviously, with the intention of the higher time frame that we do have a level that could bring us a good move. It was kind of lunchtime in New York, halfway through, so it was 12:30 p.m. Eastern, which was 11:30 a.m. Central. And they hit the GEX2, and then they reversed it with quite some volume. So when I saw this, with this, I decided to pop in a little trade. So I got filled at 422 something, and then obviously the same thing, end of day fade, blah blah blah, is the setup that I've done a million times. Just ran it all the way up. But then we get to the end. So I'm going to mark where COMEX settlement is. And usually, on most days, after NYMEX settles, Did I say COMEX? No, this is NYMEX. It just died to death usually. Nothing happens. But in the last sort of week or so, because we're in that time of the year when natural gas demand starts rising because of cold weather and all that, suddenly I noticed this. And this is a 2-minute time frame, but it's just the velocity that they brought it back up. And I was like, I wonder, is there another trade there? So I actually did another late long on a smaller size. So I was like, let me just test the hypothesis here, because I've seen them do this. And then I grabbed like another, whatever this was. Grabbed another like 40 ticks out of it, because it popped up, and I'm like, well, how high up can it go? And that was pretty much it for the day. But yeah, somebody likes to keep buying after hours. There's a lot of size as well. It wasn't like, oh yeah, we'll just buy a few contracts, it's a thin market and it moves. No, it was like a lot of, like I was watching them on the tape and I'm like, what are you doing? It's like, should you be in a pub? But yeah, so very interesting that at this time of the year there is an institution or something that likes to plow in some size after hours. I mean, to be fair, they were probably the same ones they bought here. And just for informational purposes, this whole move was 140 ticks. Well, more actually. It was 160 ticks. But from the very bottom to the end, it was nearly 200 tick move. That into the last 90 minutes of NYMEX, all in the end of day. So these kind of trades are where I made my career, and I've always considered myself some sort of an end of day, kind of an MOC style trader. I don't know why. I've never been much for trading the open, you know. But yeah, and then DAX has this other thing where it starts to turn around in and around this time of day for a nice fade. So we are seeing that right now. So I am going to pop in a little short on DAX. I think we need about 45 ticks. So we've had the Asia high that we kind of ran through and then didn't really do much with it. But yeah, let's do, because it's not the strongest setup and it's based off of single prints that could ping back up. So I'm going to do just 2 mini DAXs that there. So each mini DAX contract is €5 per tick. But I'm doing 2, so it's €10 per tick. And I just got filled at $24,044. 24. So we'll see whether they have some kind of follow through there. And just gonna do something. So we had a pretty strong move. What time was this? At 9:45, and since then it kind of consolidated. So my thought is that if we can stay below 24,060, then we may have something to the downside a little bit. But it's not going to be massive, so I'm going to, and you know, obviously we have a round number of 24,000, so that's generally a decent area to try these things. But I am against the whole trend, so I'm not going to hold this until the cows come home. My short that I ran based on a failed auction date, that did work for full mean reversion, whenever that was, Thursday, I think. But yeah, we'll see whether they can first close out the single prints. And then we need some momentum to the downside as well. But yeah, because we had a pretty strong move. So I'll show you. So we had a pretty strong move on the upside, right? So the London Open was here, but I'm not going to take that because that's like quite far away. So I wanted something nearby, and they tried to pump it higher. Didn't really manage to get much out of it. So I'm looking for the market to actually bring me some follow through to the downside. If it doesn't happen, it doesn't happen. It's fine. It's small size. But based on the available information, that is what I'm seeing here. I'm not seeing single print as a possibility to keep going higher. I think this needs to do its little reversion for 11 o'clock. And then maybe we can catch it on like a neutral day fade or something. Longs. All right, we've got 10 minutes. Got 10 minutes. Let's get it. It says gold is having a fight at this level. Gold is always having a fight at this time of day. it's never smooth. It's always like, think of it as like lack of interest, because nobody else, like sometimes it will move. It's not like, oh, it never moves. Sometimes it moves, but it's not statistically relevant enough for me to go, yeah, that's what we're doing. Right, and for this Topstep combine thingy, I'm using a similar thing. Like, let's see how VWAP behaves, and if they can't bring it back from VWAP, so I want 450 to remain as a potential short here. But I'm not going short into VWAP because you don't want to be doing that. So you want to go short above VWAP and then have some room for it to wiggle around and do whatever it's going to do. So I really want to go short as close as possible to 450. I don't know how close it will get. Asia high still remains slightly. A liquidity grab. A slight liquidity grab, a visual target. There we go. So yeah, if we pop back up and then we cannot break this POC, volume, visible range, volume profile, point of control, then we can maybe have a short in NG as well. So, Veterans Day in the US tomorrow. Regular business day for United States stock markets. Several banks and post offices will be closed. Yeah, we just had our own like Remembrance Day. That was on Sunday. That's the UK equivalent, I think. Remembrance Day. Yeah, so Samuel? Same L? I don't know. See how it's trading within a range that's ideal for option strangle strategies. Exactly, yeah. Any course or mentorship provided, please share the website. I mean, you can go to my YouTube channel and then below every single video you will get a link to my order flow teachings. where I pour my soul out in a CPD certified program. I think we're the one of the 2 CPD certified trading courses out there. Amanda says 15 green, 14 red, 52% win rate. RR 0.93, average in streaked days in a row, 2 green, 2 red. On only 2 of the days, I'm 2 to 300 max. Over 150 should be max loss. Where should I go now? Try to explore what is going on the red days, Amanda. So the first thing is to see whether there were any obvious things that were happening. Like, was anybody talking? Was it the speeches? And how many trades do you do in a day? Because like, if you're gonna tell me, I don't think you do too many, Amanda, from memory. But if you obviously do about 2 to 5, that becomes easier than people who do 50. Because what the hell can you see doing like 50 trades per day? But I would explore what the red days are about. Is it the time of day? Like, did you trade the same times as when you were green? Was there an unintended speech by somebody? Was there news? I mean, probably not, but because the government shut down. However, you can find some pieces of data in there. And obviously I'm just going by a very limited piece of information here, but it's very patchy to have 2 green days, 2 red days, 2 green days, 1 green, kind of like soldiers, right? 1 green, 1 day. And then also the fact that you are saying the risk reward is 0.93, but you're 52% win. Unfortunately, on 1-to-1, the 56% is the break-even point. So you're going to have to change something there. Either increase the risk reward to 1.3. So I'm not talking going from 0.96 and 1-to-1 to suddenly increasing it like 4 million risk reward or multiples. I would literally just try to tweak it a little bit. So maybe look at, track your MFE as well. If you're somebody who holds on to trades a little bit longer, I'm talking like 15, 20, 25 minutes, there's all likelihood that you have a maximum favorable excursion. Now, you cannot track that through TopstepX natively. You would have to go back and look at how the price has behaved. So MFE is basically how far into profit your trade went while it was alive, and then you would extrapolate the average of all the trades that you've done, and that can give you a pretty good indication whether you're jumping out too early, or maybe you're jumping out too late, or maybe you're not holding trades long enough. Because if you do it like day by day and you start to see how the market actually works with you or against you, you can get a lot more feel for it, even though I hate feelings in that way, but it does carry a specific kind of data. Okay, averaging 2 to 8 per day, first hour of open. Okay, I avoid that. Okay, then wait for the volume to step in on the 5-minute time frame. But do you so I'm gonna invoke Coach Jay's teachings here. If you use volume, do you anchor the VWAP on that volume that comes in? So, just saying, oh yeah, the volume comes in. It's a very vague statement. So, do you have an actual way to figure out a level that's based on that volume that's come in? because it's a very different way of looking at things. You can absolutely combine it with candles. Like, for example, over here, I know that there was a bigger volume candle here, and I'm looking for shorts. So there was already a reversal from 450, but where do I want to get involved? Well, probably I don't want it going higher up than 495, because then we would be breaking this structure and ultimately going back into Asia high range. That's not what I want. So I have an actual level based on volume and based on the whole idea that 450 as a call wall will be reactive. But now I'm just waiting for a trade location, which is here. However, I don't want it to go all the way up. It might, absolutely might, because it's an equal high up here. But in order for this particular scalp to work, I needed to touch 495. Then I might go short down to VWAP. I'm not going to look for more because it's too early for natural gas. But it, you know, the setup is there. It's not the D-style setup, but it is that. Infinite Practice says we need J analysis, D. Well, we're all very similar. You know, none of us are looking at, you know, odd things. Like, for example, I have this volatility scaling of stops, and then I found out that Coach Paul has a very similar way of looking at things. Then, you know, I look at volume in a particular way along with Bookmap, and then, you know, every time I work with Jay, we come up with same levels, same everything. So I worked with Vinny, Coach Vince, a couple of times. We're profile traders. We both see the market in a very similar way. So it's like, you know, once you know how to read order flow, whether it's by volume, TPOs, pure price action, whatever, you will come to this similar conclusion, right? And it's not going to be drastically different. Coach Robert as well. So Robert uses this idea of high-low pivot area. And every time we match sort of exhaustion points, like where I'm looking at shorts, he's looking at shorts, and I'm like, we couldn't be more polarizingly different, because he's an ultra scalper. Well, not an ultra scalper, like he will hold trades, but he's more of a momentum trader, whereas I'm a mean reversion trader. But somehow we seem to find same sort of areas, and it never ceases to fascinate me how people with vastly different styles who have enough experience come to the same conclusions. So it's all the same price action. So yeah, so my idea here for natural gas is to kind of put a name to it. And just let me bring up the chart that I somehow lost somewhere. Whatever did that? Where's my chart? Where did my natural gas go? There it is. Okay. So for now, it's a neutral day type on natural gas, because we extended the initial balance both ends. But it is creating a single print to the downside. Like I said, one thing I don't like is the VWAP. But what could happen, we could go into a mean reversion back down to value, the closer we get to NYMEX open. If we're still hanging above VWAP, I would be looking for a mean reversion to be shown by the moving average cross over VWAP. That can indicate momentum sometimes. But I will still wait for about 30 minutes before I attempt a mean reversion on natural gas like that. If it comes back up at 495, I will open up an early trade and then probably just sit on it however long it takes. But if it starts an early mean reversion, I'm probably going to be looking at longs somewhere around 435, although we don't really have that much. Maybe 4, yeah, so 435 could be a decent area for longs. And then longs would on natural gas would go along with a bigger picture. If it just starts to melt, it could melt all the way down to 420. And yes, I know, 420, haha. I do anchor the VWAP though, just not often enough. Yeah, and Amanda's saying I've been slogging by on my iPad, got a MacBook dropping in today. Yeah, I can't do the phone trading iPads and stuff. Like, my eyes are already going as it is. But yeah, for me, I need at least 2 screens. Like, at the very least, Asus Duo would be mine. But I like my screen real estate. I like being comfortable. I don't like jamming things in. And you know, I do watch a number of products because I have to. And because I want to have a choice of about 6 or 7 products, so that I can choose which one looks the best for the day. But yeah. Right, let's see if we can get that bounce from VWAP for the end of the stream here. I don't think it's going to happen though, because we're already at time. Yeah, so the DAX trade is just slowly developing. But that's probably going to take a while to come true. They're not pushing any higher though, so that's alright. They're building value in between 24.035 and 24.073. So if that goes, then that's it. But yeah. Alright, so I'm going to finish it here. Now tomorrow I will do the show as usual. I do believe we have group coaching. I am going to be on group coaching tomorrow. So you will see me a little bit more this week. In the meantime, let's try and not dig massive holes on a Monday, shall we? So take it slow. It's Monday. We have a long week ahead. So don't make your job more difficult than it already is by being eager beaver on a Monday. So yeah, let's size down, build some buffer, and then we'll see what the week brings. Maybe we even get the government opening. But at this point, I don't know. It's a little bit tricky, isn't it? They've been away. They've been furloughed for way too long. That's all for me today. This has been the Euro Trader. I'm Marcus D, and I will see you again tomorrow at the same time. Have a great rest of your day. Goodbye.